Alright, let's get straight to it. We're heading into one of the most important and volatile weeks we had in a while. A week that could very easily set the tone for what comes next. So in this video I'm going to walk you through exactly how I'm preparing for the week ahead, what I'm watching, and how I stay flexible without trying to predict direction. Make sure you stick around until the end. So if you're new here, welcome to the channel. This is E.L.I Trading Strategies. My name is Roy. I've been trading the financial markets for 20 years. And this channel is all about preparation. It's all about structure, all about understanding how the market is positioned, not guessing where the price should go. I don't trade opinions, I don't trade the headlines, I trade scenarios. And I use option chain data. Before we get into the charts, let me quickly remind you how I approach every trading week. I always prepare for three scenarios: a strong move higher, a strong move lower, or consolidation. Last one is usually less interesting unless you're scalping, because low volatility environments don't offer much opportunity. If the market opens choppy and directionless, I'm usually less active, because capital preservation is also a position. Now the goal is simple. I don't want the market to surprise me. That's why I prepare in advance, build my watch list, and let price and positioning tell me what to do. I don't show up with a bias. I let the market earn my participation. Now we need to prepare for a especially volatile and important week. Several of the world's largest companies are reporting earnings along with a bunch of others, whose reports will give us a clear picture of the US economy. But since I trade options, I never open positions before company reports, for two simple reasons. You can never predict exactly how the market will react. That's number one. Number two is option premiums. Both calls and puts are much more expensive because they reflect the underlying assets volatility around the earnings announcement. The smarter move, in my view, is to trade options on other companies in the same sector, because when a large company drops, it usually drags smaller players in the same industry down with it. The first stock is Micron. Micron has had a phenomenal run in recent weeks, and a correction is overdue. Looking at the option chart for Micron this week, I notice a very noticeable put wall at the 342.5 strike. Does this mean the price will reach it? Maybe. Looking further at the monthly expiration on February 20th, the call options have already hit their target. All the walls have been broken. So I'm expecting some profit taking both in the stock itself and in the recently in-the-money options. And I'm targeting a downward move. But, and this is important, you already know my golden rule. The second mouse get the cheese. Don't be the first mouse and get caught in the trap. Let the market show the first signs of a drop, and you'll make a smarter decision than trying to predict the price in advance. The second asset I'm watching this week is gold. Gold has clearly had a crazy rally since the start of the year. That's after more than a 100% gain over the last 2 years. Looking at the options market, especially the February monthly expiration, I see a massive call wall at the 455 strike of GLD. That's the most actively traded ETF tracking gold prices. Those calls went in the money last Friday, as the ETF closed at 458. If the writers of those calls don't want to pay out on those positions, plus there's another wall at the 440 strike, we could see the ETF price drop just enough to let those options expire out of the money. Now, the third asset is SPY. SPY is always part of my analysis. Even if I'm not necessarily trading SPY this week, I track it almost every day, especially for zero DTE trading. How do I analyze daily expiration and look for opportunities? That's coming in future videos. For now, looking at the options data for the upcoming Friday, I see a lot of put walls, maybe even too many. Sometimes, when there are this many puts, the index tends to stagnate a bit without a clear direction or move. On the other hand, we can definitely enter a negative gamma environment if we see sharp declines at the start of the week. And if earnings report come in below market expectations, we could see further deterioration. So if you're looking for someone to tell you exactly what to buy, this probably isn't the channel for you. But if you want to understand how professionals prepare for the market, how to act without guessing or chasing FOMO, you're in the right place. If you got value from this video, I'd really appreciate a like and a subscribe, and I'll see you in the next videos.